AGL Energy reports a $1.26 billion loss in a volatile energy market. Prime Minister Anthony Albanese to have a state dinner with US President Joe Biden, and the Chinese tech giant spending billions on AI chips. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Friday, the 11th of August, 2023. I'm Michael Thompson, and Sean Aylmer is still enjoying a well-earned break overseas. So in his place, once again today, I'm joined by Jennifer Duke. Jen, good morning.
Good morning. I'm hoping he's still listening from overseas, though.
I reckon he does. I reckon he listens in every single day because he just loves business.
He can't help it.
He can't resist. He's got one of those addictive personalities when it comes to the economy. After the show, Jen, because you're also jumping into the chair for the daily business interview that we do, and you're speaking today with Doug Morris, who is the CEO of ShareSite, a supporter of Fear and Greed.
Yeah, it was really interesting chat, and he actually gives us a little bit of an insight into his personal portfolio. So stay tuned for that.
Yes, it's actually quite interesting, the approach that he takes and the insights that he gives us. It's a really worthwhile conversation, and stick around for that. It's coming up later on. The main story, though, this morning, Jen, in a year really dominated by sky-high power bills and a whole lot of debate over energy transition, AGL Energy yesterday reported an annual net loss of $1.26 billion at its full year results, but it's painting a fairly positive outlook for the year ahead.
Yeah, it's a pretty steep figure compared to a profit of $860 million the year before. Some of it was well signposted ahead of time, though. For instance, the closure of a coal power generator as part of its decarbonisation plan, which resulted in a write-down that contributed $680 million to the loss. Closing power stations can be pretty lumpy in terms of the process for companies and for households who are relying on the grid.
Lumpy is a great word. Lumpy hides a whole lot of problems within that, doesn't it? Because in the end, it comes down to this very basic kind of demand to make sure you can still keep the lights on.
That's right. I like the term chunky as well, but I don't know that people understand exactly what that means. It sounds a little bit more disgusting.
No, lumpy sums this up very, very nicely. Please go on.
That's right. And there was an $890 million loss recorded on the value of derivative contracts. Underlying profit was up about 25% to $281 million. But this wasn't enough to comfort shareholders, with the share price down about 3.1% for the day. AGL shareholders would get a final dividend of 23 cents, bringing the total dividend to 31 cents. That's about what analysts have been expecting. Interestingly, a significant uplift in earnings is potentially on the cards for 23-24 due to higher wholesale power prices, but this is a very volatile market.
Yeah, the higher energy bills for households have really been all we've been talking about for the last year, because it's really been kind of hitting everyone, the cost of living. Did AGL CEO Damien Nicks have anything to say about what is a cost of living crisis?
Yeah, look, it's definitely a major issue. According to Finder's consumer sentiment tracker, households hit a record level of worry over energy bills in July. A third of Aussies say it's their most stressful expense. Damien Nicks said AGL recognises that Aussies are struggling with cost of living pressures, including rising energy costs. Wholesale energy prices on his estimates look like they're going to stay high over 2024. He said they're committed to helping customers and plan to spend $70 million over the next 2 years to help them manage with things like debt relief. But this isn't a new program.
No, it's not. We have actually heard about that before. And then you add into the mix as well, Jen, the fact that the competition regulator is encouraging people to basically demand a better deal.
Yeah, that's right. The ACCC has just put out a note to consumers urging them to contact their energy company to request a cheaper plan. This is because energy price increases have been 10 to 20% above the regulated safety net. This net was designed to protect customers who tend to get complacent. Shopping around should become the new norm.
Yeah, excellent advice. All right, how did local markets perform yesterday?
The S&P ASX 200 closed up 0.3% to 7,357.4 points. Construction company Boral was the top performer out of the ASX 200 for the day, with shares up 8.5%. They posted full-year results revealing a 17% jump in revenue to $3.46 billion. AMP was up 4.6% following its own results. AUB Group was up 6.1%. Coal and resources companies led most of the top rises. New Hope Corporation and Paladin Energy were both up over 5%. Contracting company Downer EDI shares fell 6.4% after cutting its dividend and reporting a $386 million loss.
Wow, there's a fair bit of action considering it's reporting season. What's happening in international markets?
So there's been some significant concerns in global markets about oil and gas prices and the knock-on effects this could have for inflation. US oil prices pushed to almost 9-month highs, US $84 a barrel, amid warnings from Ukraine that it's unjustifiable for the West to ship Russian oil. And European natural gas futures increased about 40%. More on this later in the show today. These increases mean everyone will be keeping an even closer watch on central banks and on inflation figures.
Yeah, and there's been a bit said about staple foods, things like rice and wheat and the like, Jen.
Yeah, global rice prices are at their highest level in almost 12 years, according to the UN's Food Agency. And in India, wholesale wheat prices have hit a 6-month high. The Indian government is going to provide significant wheat and rice stocks to bulk consumers to try and keep their local prices down. But Bloomberg points out that while the government's saying positive things about the nation's food inventories, it's also restricting rice exports and looking to import wheat, which is interesting given it's a major producer itself. Those are some curious signals.
They certainly are curious signals. And Jen, I've got to say, normally if I was doing the show with Sean right now, I would insert a pun, usually probably about wheat maybe, or about rice or something.
Don't go throwing rice at a wedding. Is it one of those?
Oh yeah, maybe. It's probably something about how, like wheat, it's getting expensive, it's going to cost a lot of dough or something like that. But that feels lazy, you know? So I feel like I need to impress you. So I'm going to save my first pun. I'm going to see if I can get something great later in the show. We'll be back in a moment with the rest of the day's business news. Jen, Prime Minister Anthony Albanese has dinner reservations with US President Joe Biden and First Lady Jill Biden locked in his first trip to Washington, D.C. as Australia's leader.
Yeah, Albanese will have a state dinner with Biden on October 25th during his first official visit as Prime Minister. The White House confirmed in a statement that the two leaders will discuss how the nations can strengthen collaboration on key issues to ensure they are well equipped to handle evolving regional and global challenges. Albanese said the visit is an opportunity to talk about climate and clean energy transition and security in the Indo-Pacific. It's likely the discussions will span the AUKUS deal as well. Biden had to cancel a trip to Australia earlier this year because of US debt ceiling negotiations, so they'll have plenty to catch up on.
A state dinner's quite a big deal, isn't it?
Yeah, I mean, well, the amount of coverage of a state dinner, it's a pretty big deal. I feel like you'd have the same chat on the phone sometimes, but face-to-face is always good.
And again, my knowledge of state dinners is really only formed by watching The West Wing. So
I see a lot of photos of people shaking hands. That's my exposure to it. Yeah,
and they get dressed up and everything looks very fancy. So look, it'll be cool to see the Prime Minister at one of those. Now, you mentioned earlier this story, you teased us with it. European natural gas costs have surged as the chances of worker strikes in Australia are increasing.
That's right. As we mentioned before, natural gas costs in Europe jumped this week above €40 a megawatt hour, or about 67 Australian dollars, and that's the first time since June. Workers at Chevron and Woodside Energy Group facilities have voted to strike. Their industrial action could include an indefinite strike that would disrupt the LNG industry in Australia. Australia sits alongside Qatar as the world's biggest LNG exporter. And talks are being held between the mining giants and the unions, so it's not clear what will happen next. But RBC Capital Markets analysts estimate the exports from the affected facilities equates to 11% of the entire world's exports of LNG. There aren't many strikes that are as disruptive to global markets as this one could be.
Well, that has all the makings of a sleeper story for our weekend edition.
I'll put that one up my sleeve.
Oh, no. I've just reserved it, just to be clear. I will be using that one tomorrow in the weekend edition. Now, Jen, AMP has posted a decline in net profits for the first half of 2023 to $261 million. It is looking to cut costs and right-size the business. Isn't that a fantastic corporate term?
Good old right-sizing. I think it's right up there with learnings and takeaways.
And leaning into something, yes.
That's right. Look, the wealth manager's net profit was flat on an underlying basis, with earnings from its banking arm and platforms businesses increasing. But its statutory net profit was significantly below the $469 million posted in the first half of 2022, though that included some one-off gains on sales of some of its businesses. Total assets under management did increase to $134.5 billion. It is now looking to find $120 million in cost savings by 2025. But AMP does want to hold on to some capital over the rest of this year as legal action costs linger from buyer of last resort claims brought against AMP by former financial planners. This is a $50 million headache. It's putting this money aside as a best guess of the costs it needs to cover after the July court ruling against them. CEO Alexis George said the judgment over the case is ongoing, and until it is finalised, they won't make a decision on an appeal.
Now, this next one is interesting, Jen.
I think they're all interesting, Michael.
Oh, I'm not saying that this one is interesting, excluding all other. I'm saying this one is particularly interesting because it seems to have just come out of the blue. But experts are calling on the government to close the Future Fund and sell its $250 billion in assets to pay down government debt.
Yes, a new paper published by the Centre for Independent Studies has warned that the government-owned fund will not be able to deliver strong enough returns to justify keeping it running. In fact, the right-wing think tank reckons the nation could save $10 billion a year in interest if the fund's assets are used to improve the budget bottom line instead. Now, the Future Fund, which was established by former Treasurer Peter Costello in 2006, was initially funded out of government surpluses. The report argues the Future Fund needs to secure returns of 4.1% after costs to break even, compared to the benefits of paying down debt due to the high cost of interest right now. The Future Fund's average annual return has been 7.7%, and it's worth noting that interest costs might come down in future.
Now, Jen, there are some early signs that the labour market is slowing or cooling, perhaps, in Australia. This is the kind of thing that your day job is, you're the economics correspondent at Capital Brief. So this is really something that you'd be paying very close attention to.
That's right. Every time that the ABS breathes, I sneeze or something like that, I think is what you're meant to say. I feel like that's really bad in the COVID era to even say anything like that.
Some very obscure analogy, but hey, it works. Please go on.
We try. The Australian Bureau of Statistics released new payroll jobs data this week showing a 0.2% fall over the month to mid-July. There's a bit of seasonality at play here with school holidays and the end of the financial year having an effect. But despite this, the Bureau says that this is a slower growth year on year. And bear with me for these numbers, but in the year to mid-July 2023, payroll jobs were up 3.7%. And for the 12 months to mid-July last year, payroll jobs are up 4.5%. This indicates the latest monthly slowdown is more than just a blip. This is a small but useful data point for those looking for signs the Australian economy and labour market might have let off just a little bit of steam.
Now, the business sector is on the defensive about the nation's immigration settings, releasing a new report and really blitzing the media about the importance of a generous migration intake.
The Business Council of Australia has released a new paper supporting migration as catch-up for COVID border lockdowns and saying that policy failure is what's to blame for high house prices. In particular, the business lobby group was eager to emphasise that migration helps economic growth. Big business wants to push back against claims that immigration, in particular, is affecting housing affordability. They don't agree that slowing down migration will solve the supply problem that we currently face. Now, forecasts highlighted in the paper say Australia's population will be 225,000 people smaller by 2030 than we expected pre-pandemic. Next week, National Cabinet is meeting to discuss housing supply, as we've been talking about, so the timing of this one seems pretty intentional. I note AI Group Chief Executive Innes Willox wrote an opinion piece for News Corp recently, talking up the benefits of immigration as well and the need to lift investment in new housing.
Sign Advisory, a former division of PwC sold off for just $1 during the tax leak scandal, has managed to secure contracts, Jen, with federal and Victorian government departments.
Yeah, the embattled consulting firm's public sector division was bought by private equity investor Allegro Group in July with an agreement to pour $100 million into the renamed business. The Australian Financial Review reports it has also become a pre-vetted supplier of cloud computing services for the Commonwealth, though whether it will win these contracts remains to be seen. Under PwC, the public sector division brought in about $600 million in revenue last financial year, so it's no small deal. And Sign has been on a charm offensive in Canberra already, meeting with Department of Finance officials, and it has the chops to back it up at the moment, with former federal court judge Andrew Greenwood on the board as a non-executive director.
US aviation leaders Boeing have partnered up with the CSIRO as part of a plan to turn Australian agricultural waste into 5 billion litres of eco-friendly jet fuel.
See, this is my favourite story. It's an innovative plan that's going to help the airline industry reach net carbon zero emissions by 2050. They're intending to use feedstock to make sustainable aviation fuel. Currently, only 300 million litres a year of this type of green fuel is produced across the world. That's just 0.1% of what airlines actually need. An entire new industry could be ready to take off in Australia because right now, none of this sustainable fuel is being made here, despite modern planes already able to use it and a huge amount of agricultural waste being produced down under.
You need to just enjoy that for a moment about the new industry being ready to take off. You breeze straight past it, but it deserves more attention.
It deserves a little bit of beautiful space in there. We can all enjoy that one. Bask in the puns.
Yes, please go on.
The two organisations have estimated in their roadmap that Australia currently produces enough agricultural waste to reach 60% of our aircraft fuel needs by 2025. Qantas and Airbus are looking at this green fuel. BP's exploring a biorefinery in WA. And the government is speaking with some of these groups at their first Jet Zero Council meeting next week. Yes, it's actually called that, and I'm glad to present that to you.
Yeah, Jet Zero. That's a catchy name. I like that. Like you hear some very kind of dodgy kind of committee names and very kind of boring, very functional ones that just tell you exactly what it is. You need something that's got a little bit of kind of zing to it, and I think Jet Zero probably does that. Look, one of my favourite topics as well is talking about Elon Musk and Starlink, and the National Broadband Network is looking into the low Earth orbit satellite technology used by Elon Musk's Starlink as a replacement for its Skymaster system.
NBN co-CEO Stephen Roux said he wasn't intending to scrap the existing satellites until the end of their design life, but using the technology in future could be an option. This would be alongside putting a quarter of Skymaster users on fixed wireless connections. As reported by the Sydney Morning Herald, he says the low-orbit satellites are not built to carry large volumes of data by lots of users all at once. The Skymaster satellites were launched in 2015 and 2016, and they tend to have a lifespan of about 15 years. So quick maths, the decision's probably got to be made pretty quickly. NBN Co also announced full-year results with revenue of $5.27 billion, but a $1.12 billion loss overall, and there's a cool $25.8 billion in debt remaining.
All right, turning to international news now, and a really disturbing story, this one. Dozens of people have been killed after fires tore through the Hawaiian island of Maui.
Yeah, this is completely dreadful. The pictures of this are absolutely horrific. Hurricane Dora has been passing far to the south of Hawaii, and strong winds have stirred up a number of wildfires on the island. Hundreds of buildings have been destroyed, including historic structures in popular tourist areas, with people forced to flee into the ocean to escape the flames. It's really, really dreadful.
Yeah, it certainly is. Now, X, which is, of course, was previously known as Twitter, has been fined $350,000 after a failed appeal attempt following a court finding the social media site was in contempt for delaying handing over former US President Donald Trump's data.
That's right. I wish we'd get Elon Musk and Donald Trump in stories more often. In January, the US Special Counsel investigating Trump obtained a search warrant for his Twitter account. X delayed handing over his data, which includes tweets, but also non-public information like direct messages and drafts. They wanted to notify Trump about it, but the warrant came with a non-disclosure order. This was a First Amendment test, with Twitter raising concerns about the warrant's interaction with rights protecting freedom of speech in America. Ultimately, the US Court of Appeals for the District of Columbia Circuit reaffirmed the federal trial judge's original decision and cited evidence suggesting it was not uncommon for prosecutors to request subpoenas be ordered that do not allow the target to know about it.
All right, now I mentioned this one at the top of the show, Jen. This is a cracker of a story. Chinese internet giants are ordering $5 billion worth of NVIDIA chips as the big race for artificial intelligence heats up.
Yeah, Baidu, ByteDance, which is the owner of TikTok, Tencent and Alibaba have all been part of a rush to buy 100,000 top-end processors from the US, according to the Financial Times. The order is due to be delivered this year, but at the same time, the US government has announced much-awaited rules limiting US investments in China's tech sector. This will place new restrictions on US private equity and venture capital firms and joint ventures who want to invest in Chinese AI, quantum computing, and semiconductors. The Biden administration says the move is national security focused and to stop US capital from helping build China's military. But they're saying it's not a move to harm China's economy. It's possible other countries could consider similar restrictions, and I'm curious about whether it will be a talking point between Albanese and Biden in October.
Oh, I'm sure it would be. Surely that kind of thing would have to come up.
I mean, if I had a dinner with Biden.
Oh, imagine what you could cover.
That's high on the list of things I'll be asking about.
All right, up next, Jen, is the Fear and Greed Daily interview. You're speaking with ShareSite CEO Doug Morris.
That's right. It's a platform that helps you track and manage your investment portfolio, and it's really taken off during the COVID era and beyond.
Yeah, because we saw that massive spike in people kind of getting involved in buying shares for the first time during the pandemic. And it's interesting when you talk to Doug about that and about the increase in the demand then for a platform that lets you actually track and monitor your investment. So it's a good chat. ShareSide is a good supporter of Fear and Greed. It's coming up next in the playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Jen.
Thanks so much for having me.
It's Friday, the 11th of August, 2023. Make sure you're following the podcast. Join us online as well on LinkedIn and Instagram and X and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.